And then obviously we have, as I spoke with Laurenti, 5 LOs now in the pipeline, which we are more or less working very hard to get in a fast pace to the platform. I would say ITF has been for a very long time kept 15 on as a principle in itself. So I think investors have enjoyed perhaps a higher rate than the quality of the company would warrant. And I think, our sweet spot is around the 5 million euro loan book. And that's something that we would like to see from most of the LOs that we would start cooperating with. On the positive side, it doesn't take more than 2.5 months if somebody today would say and come, hey, we're committed, here's the data, let's go. And to be honest, Current did very well. Why somebody wouldn't give out their UBOs? Well, that's a good question. I mean, in today's world, if you don't do that, I wonder how do you have bank accounts? I mean, so that's a bit puzzling, but as if it is so, it is so. I mean, I am not going to fly around the world trying to find somebody's passport copy. We just then don't cooperate with these people.
Welcome back to episode number 6 of the Income Insights podcast. I'm your host, Denny Neidhardt, and alongside me once again, Income founder Kimmo Rytkönen. Today, we want to launch a bit deeper into one of the bigger topics from our recent episode, which is the new lender onboarding and acquisition process on Income Marketplace. But before we get there, Kimmo, I want to know your personal view on how excited you are that Income finally manages a portfolio of more than 10 million euro again, the first time this year. How excited are you about this recent development?
Yeah, hi, Denny. Nice to be here again. First of all, I think we have a good podcast coming on the process, to be honest. But on the 10 million, yeah, super excited. Obviously, we did a lot of work on the older LOs after Vivo scaled down and all the other issues, Dana Rupia scaling down. So a lot of work has been done, and now it finally starts showing. So very happy for myself and for the team and for reaching the 10. And I think we're on a good growth track again.
I remember it was the third episode, the first one, the New Year's episode, which we had early in January. You said you'd be very disappointed if you wouldn't crack the 20 million assets under management by the end of the year. Still a long way to go. We got the first quarter through now. What's the projected forecast right now for achieving this goal, hopefully by the end of this year?
I guess it depends a lot on the old LO keeping up the supply. It looks relatively positive now. And then obviously we have, as I spoke with Laurenti, 5 LOs now in the pipeline, which we are more or less working very hard to get in a fast pace to the platform. So depending on those, I mean, I would still say 20 million is totally doable this year. And we shall see. We keep working towards it.
Yeah, that's actually a very good cue. 5 new lenders in the pipeline. This is something we want to look a bit deeper into, how the entire sales structure looks like and the acquisition strategy on Income to get new lenders to the platform. But before we get there, maybe we just pick up very briefly on a recent development on Income, just like a small recap on what happened in the past few weeks. One interesting thing that many investors have probably noted already is some interest rate developments on the platform. In particular, we saw that ITF decreased the interest rates from 15 to now 13%. On the other side, Huvi, very strong on their 10%. Now recently even launched a couple of loans with up to 13%. Maybe you can just very quickly elaborate on the recent events regarding those interest rate changes, why they happened, and maybe some background info for investors here.
Sure. Well, I mean, first of all, of course, as it's a marketplace, like all the other marketplaces, it works on supply and demand. And in that sense, in our case, when the companies or when the LOs have more need for more funding, they may increase. At the same time, when they might have less need for funding, they will decrease the rates. And then obviously on the other side, it depends on what is the investor appetite to pay, or sorry, to buy into the loans with a certain interest rate. So if there's more demand at lower rates, then obviously they can do it. I would say ITF has been for a very long time kept 15 on as a principle in itself. So I think investors have enjoyed perhaps a higher rate than the quality of the company would warrant. But I guess it's just normal fluctuations at this point. So I don't think there's anything dramatic behind it in that sense. It's normal market economy.
Yeah. I was wondering, is there maybe something like how frequently you maybe advise on the side, look, maybe now is a good time. There's a lot of demand from investors. Maybe this is an opportunity to slightly lower interest rates, or in the case of Huvi, where you say like maybe we would see less of your loans on the primary market, or for a shorter period of time, if you maybe become a bit more appealing to investors. How often do you advise with them on maybe also adjusting interest rates?
Well, I think for especially when companies come to the platform, the loan originators, we usually advise them to start higher than they would even like, just to get the investors to actually take a look at them, to kind of have the interest raised. We seldom tell them to decrease, but obviously there are cases where they may come to us and say, hey, inflation's been heavy, our costs are up, what can we do with the funding cost? Do you guys think that we could drop it by 1% or 2%? And usually our answer is, guys, yeah, you can test. I mean, we are not here, it's a marketplace. We're not here to say that what's the right level. The right level is where there's supply and demand meet. So but surely we are for it also at times when they decrease it. And it's sometimes even good. I mean, if their own profitability requires it, as an investor, you would probably be rather earning 13 and seeing there's a strong profitability in the loans on a unit level for the company than saying, hey, I want to get 17, but the company's not making any money. So these are all the aspects that we kind of have to take into account.
How, in this regard, do you view the first performance of Current Auto? They launched on the platform now recently, 10%, and considering their overall profile, it might not be as appealing to many investors, is my gut feeling. How satisfied are you with their launch on the marketplace?
Well, I guess, I mean, it's relatively early to say still, but I think they've raised around 200-something thousand in a relatively short time. So I think it's quite a good result, all things considered. If they would be like what Vibus did early on when they came 15% and shorter loans, then obviously those are more appealing. I think in the first month they reached about 1 million. So the trajectory was much higher there, but I think for Current, it's not a bad start.
And maybe just one very last follow-up question. What is the target for Current Auto? Like where do you see the portfolio growing of them on income?
That's a good question, and actually I think that takes us very nicely to the process part, because we started roughly 2.5-3 years ago. Our onboarding process has gone through a lot of redesign through that, and actually we start today. The first discussion we have with every LO is basically the analysis on the funding need. How much can they take from us or from the investors, absorb investments, I mean, and then at the same time, what are their growth plans? So I would say the same with Current. I mean, we would be aiming at a minimum of 1 million book, preferably somewhere in the range of 2 to 5. And I think, our sweet spot is around the 5 million euro loan book. And that's something that we would like to see from most of the LOs that we would start cooperating with. I'd say minimum 1 to 2 if there's a projection to grow higher. If they say 1 million is our cap, we can't take more, than the economics of running such a book doesn't really make a lot of sense. Yeah, and then there's no up level, of course. If somebody gets to 5 and we're happy with it and goes up to 20, then we're of course extremely happy if the investors are happy and if all things being equal. But yeah, I think the target would be between 2 and 5 million for the new ones.
Okay.
And
so let's launch a bit.
Yeah,
deeper.
And that's where it starts.
Let's launch a bit deeper into that process of the onboarding. So maybe just to start off, maybe you can elaborate a bit more, like what's the overall strategy on income when finding new lenders? What is, like, maybe just like if we look very broadly on it, like what's the overall approach that you have on finding new lenders? And maybe sometimes it's not, finding new lenders, but to be found by lenders. Also something we can talk about. But maybe just give me a global idea about how this approach looks like on income.
Okay, when we started, when we launched, we started with several, you could call them agents as such. So these were fintech related people around the globe, pretty much one for each continent, who had their own networks. So they sent us some leads, and at first we were pretty opportunistic, right? So we would say, from wherever comes, we'll take a look at the jurisdictions, but not all jurisdictions are so easy. There's limitations of legislation, what you can do in crowdfunding or such a thing. And then, there's even limitations on lending businesses, and then going all the way into some jurisdictions being AML, so anti-money laundering gray areas. So, what we do today is Jason, obviously from sales, he's connecting with our pipeline and our customer lead lists. We do have still some agents or cooperation partners who are looking for these, and every now and then throwing LOs to us. And then, yeah, sometimes LOs just contact us also by themselves to hear more about it. How do we choose today which jurisdictions we go to? So we flipped around the system a little bit, or the process. We start with AML and KYC. So that's anti-money laundering, know your customer. Due to the fact that some areas are gray, some areas, sometimes the UBOs of the company might not be okay, meaning that, there might be, we haven't seen any sanctioned people on the ownership lists, but generally, these are risks that there could be, sanctioned money, sanctioned whatever. So the first thing we do is we check that, and this is how we kind of cut off those jurisdictions where we can't operate. And now, obviously, we go through with Jason and Lavrenti, we go on quite often through what's the next pipeline, where's the focus is, and the kind of like trying to bring a bit of more order into who are we going to onboard next.
Can you talk about like the split in terms of what is the active acquisition that you do yourself, and how many inquiries you get from external lenders, or let's say through agents that you work with?
I think lately it has actually come through the agents. So these are, financial advisors, maybe even smaller funds, these kind of, who are already cooperating with lenders and saying, hey, this could work to the funding mix that you're doing. Most of these people we know personally, of course, as well, and they seem to like working with us. So it's kind of a natural for them to point the right companies towards our way. Lenders, LOs connecting with us direct is probably the least common. So I would put them in that order: agents, direct sales, and then direct contacts from the LO side.
And can you break down now again the due diligence process a bit more in detail? So how does the pipeline, how is it built up basically? So does it start off with, okay, look, we have a big scope of potential lenders we could work with, but first off, you know, those are the first things we try to check off. So as you said, like, okay, what are the, let's say, what is in terms of the jurisdiction, AML, KYC requirements? Next up, something you mentioned, maybe the funding need. What's their growth plans? Just maybe you can walk us through a little breakdown of how the pipeline is built up.
Sure. Okay, so I mean, I would say if I look at the, you know, Pipedrive, what we're using as the CRM sales system, then, you know, we would look at, there's a list of leads. First, we filter out those jurisdictions where we definitely don't want to go or where we see that it could be problematic. So in terms of KYC, AML, not necessarily with the company, but, you know, bank transfers, other things might cause trouble for everyone. So we filter out those, we see, okay, these are the companies within those jurisdictions where we think business is feasible. After that, we would go to the funding size. So, you know, we have a few that have said, okay, we're interested in a 500,000 book or something. We'd say, okay, we know we're not interested to spend time on that. We need to get a bit higher. So we filter by the amount of what's the funding need. Now let's say we've identified those guys we're interested. We'll have a chat with them. Usually that's an intro call where we introduce our own process. They introduce their product. Usually a lot of the due diligence people from our side are already present, so they can ask questions on the product, the size, the NPLs, kind of an overall getting to know each other call. If needed, we'll sign an NDA in between, obviously, after which we would do an engagement agreement. So again, something we flipped around a little bit, saying is like, guys, if you wish to be onboarded and if we want to do the work with you, you know, and not spend time without compensation, then let's have a kind of an engagement agreement in place showing that you're serious, we're serious, and that we will go through in a certain time, you know, the whole process. So engagement agreement being signed, we go into the AML and due diligence process. And I said AML KYC, that's very simple. You look at the company where it's established, registered, who are the board members, who are the UBOs, the ultimate beneficial owners, and you know, what's the source of funds for the business. So usually this clears easily, but this can also be a deal breaker. So, you know, if, for example, if we can't get the information who are the UBOs of a company, we obviously can't start cooperation. And there's been cases like this, unfortunately. I don't know why a loan company wouldn't give the UBO details to a funder or to an investor, but you know, perhaps there are reasons. So in that sense,
sorry if I just go in that part. How often would you say is that the case? So how often, maybe just to get an idea from the outside perspective?
It's very, very seldom. I mean, as I said, there's been cases, but I would say out of 100, this is 1 or 2. Okay. So it's not really like that the industry would be ripe with people who want to hide themselves. That's probably not the case, but it happens. And, you know, it's quite disappointing if we would do that before the KYC AML was at the end of our list. So we would do all the work because it was kind of a tick in the box. And then something like this happened. So we said, okay, you know, to avoid disappointment and extra work, let's just lift it up because it is a tick in the box, but let's tick it first, not last. So that was a change we did. And then, yeah, when that ticks, then after that starts due diligence. And due diligence means we do our analysis of the company and we try to figure out how good they are, how solid they are. And this actually goes to both financial and legal part. If I look at the financial part, then more importantly, the most important part is obviously the analysis on the loan book because of the junior share advance rate logic, is to understand what's the quality of their loan book. So if the loan book is good, the junior share is less. If the loan book is not, and by good, I mean it generates a lot of cash. So this could mean that the NPLs are very low or their pricing is very high. The end result being it's a cash generating loan book. And then this on kind of this affects the advance rate. So, but that's where we put most of the time to understand. And companies that have top ups, different features in their products, then this is the part that takes also the most time for Maciej to understand the product and to really crack it. Legal due diligence, if I continue from that, goes to a bit of a monologue, but maybe it's interesting to people. So this is, again, I mean, we work with a local law firm, and and of course also with an Estonian who advises us consistently. So if we go to a new country, we want to know that the crowdfunding works, the assignment of claims works, if pledges are needed, if the LO's business is regulated, does it require a license? Is their product legal? If there are APR caps, how do they do collection process? Is the collection process legal that they do? And pretty much all the other issues related to operating in such a country. And that's pretty much in a nutshell the due diligence part, what we go through.
When maybe just having again the bigger look at the topic, so how long, I was wondering, is the sales cycle? Let's say in an ideal world, how fast can you then? Maybe the very last part is then also the integration, the IT part, and putting their assets on the marketplace. But how long would you say is the overall sales cycle from that very first initial research, initiating the contact, up to, okay, the assets are on the marketplace? What is like the fastest way you can implement a new lender? And what's, let's say, the average size in terms of previous lender experiences?
Sure. Yeah, and you're absolutely right. I mean, I focused on the due diligence, but after that comes obviously the LO API integration to the IT integration. So where we connect through the API, and then the API enables the listings, the monitoring, and all the other stuff that goes on the background when you list these loans. I would say ideally we would be around 10 weeks. It's probably, so let's say 2.5 months is probably, if you would look at the process from start to finish. This is like if the LOs provide us all the data as we need it, and if we can work on the data as we've scheduled, then I would say it's roughly 10 weeks probably. Longest part is obviously the due diligence. That takes about a month. And IT integration, again, it's not too complicated. If they have resources free and we have, then it's around 2 weeks. So give it 10 weeks. Now, what's the sales cycle? That's a good question. We just last week had a discussion with somebody who's been in the pipe for 2 years. So coming and going, coming to us saying, hey, we'd be interested, we do a little bit of work, then disappearing, coming back again, saying, hey, now would be a good time. Okay, let's look at it. One of the reasons why we changed also the engagement logic into the start, not them specifically, but kind of this kind of. So we would like to see committed companies. On the positive side, it doesn't take more than 2.5 months. If somebody today would say and come, hey, we're committed, here's the data, let's go. And to be honest, Current did very well. I think they had some IT things they wanted to finish before freeing up resources to this. But once that was done, and if I count the start of and that was actually communicated nicely to us. So if I count the start from where they actually started working, then they pretty much went in the schedule. So we see good ones, we see kind of flaky ones in the cycle. But I think I've seen this, and I have some friends who are doing sort of similar. I mean, they're doing data analytics selling to LOs and fintechs and banks. And, I just spoke with the founder and they said that, the sales cycles somehow after COVID seem much longer. And that's something versus my previous, how to say, business experience, I do feel it as well. Somehow things are moving always slower than you expect.
Okay. Coming back to the team aspect of it, now you mentioned Lavrenti, the CEO, and then it was, what was the Jules, what was the name? Jones?
Jason.
Sorry, Jason.
Yeah.
I was wondering, like, how does the dynamic work? Like, how much of that workload in particular is managed by internal staff? Now you mentioned there's a local law firm, so you also get some third-party advice. Are there any other touch points where, let's say, third parties are involved and you consider this, like maybe a thing you can do a bit more outsourcing, which part of the job can be or should be done a bit more in-house? Can you maybe elaborate a bit on this aspect?
Yeah, I mean, we have a relatively small, efficient team in that sense, and we buy stuff from outside, like, for example, the local Estonian law firm, we have an ongoing engagement with them. We don't need an in-house lawyer as such because, we always have the resource when we need it. These guys are specialists in crowdfunding, and it just makes sense to have those, for example, as an at this point as an outsourced service. Obviously, foreign or outside of Estonia law firms, we also engage when we need some help, of course. So there wouldn't be any reason to hire a Mexican lawyer for an engagement. The business has to be relatively big there to warrant something like that. So those are definitely the ones. I think sales is good to have in-house, marketing is good to, and sales, towards the investors, good to be in-house, customer service is in-house, due diligence definitely in-house. We can't really buy it in from an external company. I mean, Maciej has been looking at loan books now for 3 years and he's a super good guy in that sense. So, I wouldn't expect us to find anywhere from a third party, going to Ernst & Young and saying, hey, can you help us with this due deal? I wouldn't find it's a very specific, very specific skill set. So in that sense, I think we have a good mix of and of course, IT is always a thing, what do you buy in-house? What do you buy externally? Currently, we do more external service providers, although the IP is owned by us. But, then we can also plan the resource need better. So yeah, so that's how it looks.
Okay, understood. Maybe to wrap up this topic before we're also running out of time, maybe an opportunity for you to leave some interesting stories now on the table. I was wondering, like, when you are throughout that cycle of maybe 2 years with a potential lender, I'm sure there's also a lot of objections that come along the way, why maybe a collaboration wouldn't work from their end, what they see. Do you have maybe, let's say, you can divide maybe this answer into what are the most common objections? Is it really like, okay, we find cheaper funding elsewhere? Or maybe there's some more, let's say, out of the line arguments why a collaboration wouldn't work? And maybe you can talk about the hurdles that you have maybe also towards the end, or maybe some obscure reasons why they can't reveal their UBO or whatever the case may be. Maybe this is something you can comment on.
Yeah, obviously, we haven't had any of the existing ones. In that sense, we haven't had any of that kind of situations where something would have been like, UBOs would have changed or when we wouldn't have known about it or anything. If you look at the ones who have now been onboarded, have all been relatively happy with what we see. But, let's say there are companies that the 60-day buyback is very problematic too. And that might be coming, and we've seen that with a few companies we've tried to onboard. And it's because their collection process works actually really well. So let's say in a year's time, they let's say that their NPLs at 60 days would be 50%, but they actually collect all the way to 360 days, and the end result is, let's say, 20 or 15% NPL. So if they now need to buy it at 60 days past due, then it's a cash flow drain on them, because then they would prefer an investor who doesn't require a buyback at 60 days, for example. So this is a good example of something that we didn't even think about, but which limited us to onboard 2 relatively good ones, and to scale up. But you know, there's a lot of, the loan companies are all different. I mean, similar product, but they all have their ways of how they view the thing and price it. So why somebody wouldn't give out their UBOs? Well, that's a good question. I mean, in today's world, if you don't do that, I wonder how do you have bank accounts? I mean, so that's a bit puzzling. But as if it is so, it is so. I mean, I am not going to fly around the world trying to find somebody's passport copy. We just then don't cooperate with these people. So yeah, it's an interesting, but overall, I think good trust. Good discussion, good correspondence with Hovis, ITFs, all the other guys. So far, so good. Hope to scale up with all of them and see that 20 million very soon.
All right. Good. Then thanks for those insights. Yeah, before we're running out of time, maybe just a quick outlook. What are the things that the income team is currently working on? What can investors expect now in the upcoming weeks? Is anything now really like hot on the deal table that you can also already reveal, or what's about to come on income in the next weeks?
Yeah, we're looking at. I mean, so there's a Mexican LO that's been on a very long on the table. It's not Vivos, right? So it's somebody else who's been already debunked, and Vivos is gone for now. We'll see if ever to come back. We don't know yet. We haven't heard from them. So that's something. Lavrent is kind of running a very tight ship on that, pushing everyone to get the onboardings done, because we now reached the 10 million. Now we need new assets. So that's good. There's another interesting one from UK. They're doing legal funding or like claim funding. There was something along those lines on Mintos before COVID hit, and that caused some problems. But I guess learning from that, we can create the product so that it's actually attractive. It's a super interesting concept because it's insured. So, an insurance company always covers the claim, meaning also for the investor. So that's an interesting one. But yeah, so these are the ones we have. We're looking to broaden our horizon from the payday loans and the traditional installment loans. So we'll see how that goes. But interesting times.
Yeah, but as you said in the previous episode, anything that is cash flow related and anything that's working a good cash flow is of interest to you. So we're curious to see what the next results will show once the deal is then ultimately finalized and in the bag. All right, Kimmo, then cool. I would say we wrap it up for this time around. Thank you very much again for your time, for your insights on the onboarding and acquisition process of new lenders on income. Much appreciated, and looking forward then to catch up with you next time.
Very good. Thank you, Denny. We'll talk soon.